Hello everybody, Jim Malone coming to you live on the Dallas Trading Floor. It is Friday, and wow, it was a really big deal today. I mean, markets are down, and it looks like we are going to drop a lot here. Just wanted to kind of go into the charts here and everything. Most importantly, right now, we have a situation where the market is in a correction. So when the market is in correction, it is best to go to cash. So, you probably want to start closing up your positions. I think we're going to go down. We could potentially go down about 20% on the S&P. And I want to kind of show you that. I've been selling, basically taking profits on my positions. Even in oil stocks, I did sell Chevron today. I'm still holding BP and Shell, but pretty light. I'm moving to a short position. I have 6 shorts on, doing pretty well on those right now. But I'd like to kind of show you as kind of what we're in for right now. Basically, this is a chart of the S&P 500, and I want to show you the legs down. We had the first leg down was basically starting here in basically in November. Then we had a relief rally, which came up here. The second leg down we had, and that basically ended basically about the third week of March. Then we had another relief rally, came up here. Now and then we pulled back down, and then we started this last relief rally. Basically, the last relief rally happened starting basically mid-May. It came up, it broke just today, and it looks like we're going to take a third leg down. So typically, when markets move like this, they take 3 legs down. This was the first leg down here on December. Then we had the relief rally, second leg down, relief rally, third leg down, relief rally, and now we're probably going to move down at least 20%. Now, how do I know that? That's typically the distance between on the first leg down. So it looks like we're going to move down about 20%, most likely. I'm guessing that we're going to be, probably down about in the 3,200 range. For the S&P. So let's look at let's go back here and kind of look at the monthly. Let's go to the weekly first. Let's take a look at the weekly and kind of show you what I'm talking about here. I do believe we're going to come down probably to about here on there, and that's going to be about 35. I'm calculating about 3,500 on the S&P. That's looking where we're coming down. Why? Because this is the former higher high. When we came down on this, we came down. This is the first leg down, relief rally, second leg down, relief rally, and then this is going to go. I think down like this to about 3,500. That's kind of what I'm looking at on the S&P. So it's a fairly, it's a fairly precipitous drop here, and so you need to be ready. And the best way to get ready, of course, is if you're down more than 7% on any position, you should sell it immediately, put it in cash, and then wait for some opportunities. Because when this bottoms, everyone is going to go freaking out. And when this bottoms, there's going to be an opportunity, because I do believe we'll see another relief rally when this is done. So right now, just wanted to kind of give you an overview of where we're at. This is this is sort of what's happening in the market. We have that first leg down, relief rally. That's the first leg. Then the second leg down, relief rally. Then the third leg down, and then we've just come up through the relief rally. We're expecting now about a 20% drop, probably down to about the 3,500 level, or possibly lower right there. That's where kind of I'm expecting to see the drop to. No, remember, it never moves down straight. It never moved down straight. Let's get to some of the market indicators that I think are really interesting. This is the S&P 500. As you can see, it's underperforming It's below the 200-day moving average, so that's definitely been underperforming. And it did rally here a little bit, but it's going to move down. It's going to move down from here. Lots of selling, of course, in the market. We're basically the only lots of selling going on. There's probably going to be more selling, I suspect, in the tech sector. I'm looking at Adobe, possibly as a short, and some of the other strong tech leaders. On the NASDAQ, and this is where I think we're going to see a lot of the damage, and that is basically with this. As you can see, well underperforming that 200-day moving average, and as you can see, it's moving slower. And it definitely is going to move down, probably about 25, maybe 20%, I believe, from where it is currently. So get ready for that. This is the advanced decline line, and we're starting to see many more decliners than advancers in the market currently. Just want to give you an overview of the top 20 groups. You'll notice here, basically these are mostly oil stocks. That's why I've been kind of been on the toot for oil stocks, as you can see. But even some of the oil stocks are not immune. The drillers were off heavily today, and so were the transportation. These are the shipping companies like Zim and that kind of. They were heavily off. But we did have a nice bounce in some of the, believe it or not, media periodicals. This is sort of down. For some reason, there's only a few groups in this one. So this isn't really significant, but if you look, really the only groups right now that are performing very well, of course, are the oil and gas stocks. So that's kind of where to take a look. Also, currently, these are all of my current long holdings. Not very much at all. I did have one stock that bucked the trend. Of course, this is a inverse ETF, and what it does is it's inverse against the 20-year the 20-year price. As the interest rates go up, the value of the bonds fall, and so this one basically is the inverse of that, and this one actually goes up when interest rates are going to go up. Now, we don't have total word on the interest rates, but it's very likely we're going to see some more interest rates hikes. Why? Because, of course, we're at the 40-year all-time high of inflation, and one of the ways you can tame inflation is by raising the interest rates, and of course that will kill the economy, but it will get rid of inflation. Inflation is running as high as I've ever seen it before. I can remember time back in the 80s when I actually, a long time ago, when I was in undergraduate school, when it was running like this. And I actually postponed graduating because I didn't think I could get a job, and I was sort of right. I mean, I did get a job, but a lot of my college classmates did not. So prepare for impact, as it were. I do have a position in BP. I did sell my position in Chevron, and then I have a position in Shell. They were both off about $1 today, not a lot. This is the one kind of safe harbor area. The reason I sold Chevron was just to take profits. I will probably be back in it on a pullback, but that's kind of where I'm at right now. Just want to show you a very interesting chart. This is a chart that I was doing a little bit of research today. The black line that you see on this chart is the SQQQ. So if a year ago you were to take $100, invested $100 in the SQQ and $100 in the Q, this would be the result. Of course, the SQQQ is the black line. The QQQ is the green line, and you can see they're diverging. So you would have made money had you invested $100 a year ago in the SQQQ. Now, of course, that would have been pretty hard to do because we were in an uptrend of that. But we're starting to see some divergence. So probably on Monday is when I'm going to be looking at possibly buying a position in the SQQQ. I don't think it's still too late. We don't want to go too far on this, but I do believe we're going to see a continued weakness on the open on Monday, just based on what I'm saying. There probably will be a bounce, and then on the open on Monday is when we're going to see some of the damage. Now, if you'll notice, the SQQQ has pulled right above the pivot, the buy point on The SQQQ is 52.87. We're currently at 56.12, and as you can see, there was a gap up today. If you can see that in this chart, there was a gap up, and so I do expect that we will see a lot of piling in on the SQQQ on Monday. That's kind of what I'm looking at in terms of that. All right, a few more things before we get to the questions. Here is the value of the small portfolio. I only have one item in the small portfolio, and that is the TBT. And this is the ETF that I was talking about here. That when the interest rates go up, this one goes up as well. So this give you an idea of the chart on the TBT. We basically entered it here back on the 31st of May, as you can see. And then we've just been riding it up ever since. Now, I just do expect this one to move higher based on the situation. We had a lot of buying today, and I may increase my position on here. It's a little bit extended, so I may not do that. I want to see it kind of move. I want to see it pull back a little bit towards the 10-day line, but I may be able to buy it here because it's only 2% above the 10-day line. So this is one that is performing well. It's got a 97 relative strength. So that's pretty strong when it comes to it. This is the TBT ProShares Ultra Short 20-plus year ETF. So that basically is the situation. The situation with that one. All right, now let's get into the shorts. I do have. I basically have 5 shorts on now. They're all Barefoot Spreads, and I kind of want to show you how they're faring. I did put a short on Nike, NKE, of course, is the symbol on that one, and this one is up. Let's take a look at the chart for Nike. I should say Nike because Nike is the god of, speed, I guess. Anyways, today, let's take a look at it. Today, of course, it was down significantly. It got a little bit of a bounce, but it was down about 7% in one day. And this one's performing very, very well when it comes to when it comes to that. So just kind of show you lost my train of thought there. I just want to show you my these Barefoot Spreads that I have on. So I will move that over there real quick. There we go. All right. So these are the Barefoot Spreads. I don't know if you can see this. It's kind of small print here, but the one on Nike, our entry cost on this one basically was $420. Here we entered at $420 currently, with the price of Nike at $114.75. This one in just a few days is, we're up about $124 on this one, so that kind of gives you an idea of where that one is at in terms of that. We have also moving over to the second one. We have also a short on American Express, and that one has been pretty good. We're currently really far up on this one. American Express really had a down day today, but the value of that trade is moved very nicely. The entry cost on this one $572. Currently, we're up $541. So that would be the price, obviously, of the that's the price, of course, of the trade. This is what it would be worth. So currently the value of it's about $1,113 is two shares, but this one's doing pretty well as well. Now we do have a situation on Costco. I've had this one for a while on Costco, and we're up tremendously today, and I think that we will do well on this one. Basically, the situation here is on Costco, we did roll this one forward. We rolled it up and out a little bit, so we have quite a bit of time on this trade. October 21st is the expiration date, and we're down overall because we did have to roll it The current value of this is about $403. We do expect this to move higher, so we're a little bit underwater here, 283. But we'll be moving forward. Now Disney, this is the other short that I do have. This one's doing well. We're almost at the expiration for Disney here. Let's take a look at this. This one cost $530 to enter. We're currently up on this one $396. We probably will take it to the end. The expiration of this is June 17th, so we're probably just going to ride this one all the way into the end and hopefully end up with about a $470 profit, and that would be all the money. So that one's looking pretty good. Disney is looking pretty good as well. And the fifth one, and that's Netflix. We probably will be adjusting this one just because Netflix is starting to come down, but it still isn't down quite enough. So we're off on this one currently 141, but I suspect that I suspect that this one will improve significantly due to the fact that let's move over to the due to the deterioration of the market. I think this one's going to do well, but we're going to extend this one out a little bit. Here's the chart of Netflix. As you can see, we had a significant pullback today. The shares were off about 5% today, and we do expect them to move lower. The break even on this one is about 175. We're very close to that right now, and I do expect in the next few days with the action in this market, this one will start to return a pretty good money on it. Currently, the expiration on this is on the 24th, so we have to, we're gonna have to make a decision here pretty good, but it's trending the right way, and I do think that will improve. So basically, I've been closing my long positions, and I have bolstered the short positions. If you're interested in trades like this, you need to be on the Action Trade Alerts, and that is at www.dallastradingfloor.com, and that's where that one is. So without further ado, let's get back to, I think this is the last slide. Yeah, it's the last slide here. So let's get into some of the questions. Thanks you for holding so much. Lisa is first up. CVX hold or sell. So painful. I lost oh geez, I'm so sorry. Nothing is working. Oh geez. Wowie kazowie. I know it is very, very tough right now to trade. We did move to that unfortunate, we've unfortunately been moving to the to a situation where we are in this we are in this marketing correction. So that's the thing. I want to reiterate is that we are in a marketing correction. So you've got to take defensive. This is one of the reasons why we use the 7% rule, where we're putting a stop loss in on everything 7% down from where we bought it. I liquidated my position in Chevron today. I did make a slight profit. It was very small, only about 1%, but I did have a fairly large position, so it did cut cash flow. I'm down a little bit on BP, and I'm probably not going to sell the other oils. I've got BP and Shell, relatively small positions. And then basically I'm out of everything else except for the bond fund, the inverse bond fund. So it is really, really tough. It's very, very tough when you have this. Part of the thing is right now right now it's a time to be relatively small on your portfolio, not in a lot, and that's just the way it is. If you are down on if you're down on Chevron, you might want to sell half of it I do have a feeling that we will be coming back, at least a bounce on Chevron, just because the oil sector is the best sector currently in the market, and that is the best sector currently in the market. So let's take a look at that chart just to kind of put it up there for everyone. As you can see, I made my buys here, basically at 150, then 175, and then 179. And so part of this last little bit here, I was able to get out at 176. So I did make a little bit of profit. Not a lot, as much as I like to, but I think we're going to see a bounce. But I think we need to wait for Chevron to come back down to the 21-day line. It's right at the 21-day line right now. I suspect we're going to see some support for Chevron at the 21-day line. I'm looking possibly to get back into it at about the 21-day line. So we'll see what happens on Monday. We're only 4% above the 50-day line. And of course, this is the red line here, but this is still a healthy stock, believe it or not. I know it's, here's the thing with CVX. What I would do is I would reduce your exposure. I would probably sell half the position, and I would place a stop loss at, let me get you a good number here. What I would do here is I would sell half of it, and I would put a stop loss at the 21-day line, and that is at 174.11. So what I would do here, Lisa, is I would put, and let's put it up there so you can see it. See if I can put it up there. All right. Oops. Let me get, there we go. So I would set stop loss at 21-day line, which would equal, and I'm going to do this, 174.11. There we go. 174.11, and that's per share. So that's what I would do with. Oh, let me put for CVX. So this is what I would do with CVX here. I would set my stop loss at the 21-day line, which is 174.11 per share. So that's what I would do. Now, if we get a bounce tomorrow, which I don't know if we will, you may not be able to set it. Yeah, the after-hours price on Chevron is 175.20, so you should be able to set a stop loss at this level. If it moves below that, then you're going to be sold out. But I suspect we're going to get a bounce here. That would be my guess on Monday. So you may not want to sell out completely. You might just want to put that stop loss in, and that way the market will, hopefully, it will move higher. But if it doesn't, you're going to be in a better way. All right, let's take a look from Drunk Squidward. Let's take a look at ExxonMobil, and let's look at putting it. Now, I don't recommend selling right out. What I recommend doing is setting a stop loss that's going to allow us, the best thing to do. Now, with ExxonMobil, I think you want to set the stop loss at the 21-day line. And let me show you that one on ExxonMobil. So let me go back here and put that out for everyone. And that, if for ExxonMobil, XOM, set the stop loss at the 21-day line, which is 96.60. 96.60. So here's what I would do with Exxon. With ExxonMobil, oops, that's the wrong one. Let me. Hopefully that will. Yeah, there we go. For ExxonMobil, you want to set that stop loss at the 21-day line, and that's 96.60. Currently, it's trading at 126. So as you can see up there, that's where it's trading. So that's what I would do to protect that. I don't believe it'll move. I don't think it's going to move all the way down to the 21-day line. I think it's going to bounce at the 10-day line. The 10-day line on ExxonMobil is 99.78, but you don't want to put your stop loss there because you're going to give up some of your profit. So here's what I would do. I would set that stop loss at the 21-day line, And I think that's where you're going to get your best bang for the buck. I think that's where you're going to get the best bang for the buck. So let's see. Let's thank you very much. All right. So that's what I would do. That's what I would do here, Ground Current Squidward. I wouldn't buy it or sell it. I would put a stop loss at that 21-day line, and that's what I would do for Exxon. All right. Can you take a look at Ford? I don't think it's going to be too nice, but let's take a look at Ford for everyone out there. For we all get God. That's pretty cool. All right, let's look at Ford, and here we go. Come on. Yeah. Just not looking very good right now. Here's the thing with Ford. You'd probably want to consider here. I'm looking at it kind of here. The action. It's sort of gathered around that 21-day line. It looked like it's got lost support there. You know what? I just think that it's probably better off with Ford. And I know that this is painful, so this is why I set stop losses and I just set and forget and just let it do its magic. So, but here's the thing: I would if you're down more than 7% on this one, I really would consider closing it, going to cash, and then waiting for a better opportunity. So that's basically the thing. So basically, here's the deal. With Ford, I think you just shouldn't let it move against you more than 7%. So I would put, if you're down more than 7%, I would sell it. But if you don't want to do that, and I can understand why you might not want to do that, I would possibly consider putting in a stop loss, and then it will sell it out for you. The stop loss I would recommend right now is the lower low, and that would be 1207. That's where I would put it. So if you don't want to do, you probably should just sell it right now and take the loss. But if you don't want to do that, and I understand it's hard, it's very, very tough. But if you don't want to do that, set stop loss on Ford and where I would put it would be 1206, and the reason that is the lower high. So that's what I would be doing. That's what I would be doing here on Ford, is I would be setting it there because I think it's going to go lower. I think this one is going to go lower because it's lost support at the 21-day line, and as you can see, there's a lot of volume coming in. This is going to be this is right now a basic sell-off for the entire market. So that's just kind of the long and the short of it. All right, let's take a look at TikTok. Thank you so much for everybody that's come online here. Appreciate it so very much. All right, what's EBITDA? That's earnings before interest, taxes, and deductions. Okay, so that's EBITDA. So it's used for calculating. That's a fundamental analysis tool. It's used for calculating the fundamental analysis. What do you think of Tilray long term? I think that you should smoke it and not buy it. That's what I think. I think the problem with the cannabis industry, I was trading cannabis stocks back in 2017. I did very, very well on them, but I haven't traded them in over 5 years. So everything runs in cycles, and on Tilray, I know that you're probably trying to justify holding on to it, but don't. Just take my my advice on this one. I don't know if Tilray is going to ever come back. So here's the thing on a stock like Tilray. This is by the way, I'm showing on the YouTube feed. I'm showing the chart of Tilray. Currently, Tilray is selling for $3.42. This is terrible. I mean, no offense, but Tilray just is not a stock that you want. Even though you have sales going up and you do have a profit this last quarter, there's a negative cash flow in this one. They're losing 75 cents a share, and in this market, where they can't really address the entire market, this is not a stock you want to be in. If you're down more than 7% on this one, I would get out of it. Why? Because this is a terrible chart. If we go to the monthly chart, you can see that basically this is just a money-losing machine. Basically, if you bought this thing back in March of 2021, you would have bought it at about $60 a share. It's worth literally 5%. You've lost 95% of value, 95% of value on Tilray, basically over the last year or so. So, just not something you want to be in. I don't think it's good long term. At $3 a share, listen, it's pocket lint if you bought it at 60. You're going to have to probably take a loss. Companies can go out of business. Believe me, they can go out of business and get delisted. I'm not saying that's necessarily the fate for Tilray, but this is a terrible stock, and you just don't want to be in it. It's just not working, and it's just not where you want to be. So, sorry about that. I just, have to be kind of brutal there. All right, let's look at NEO. NEO, I do believe they just announced another area of shares to stay away from. It's probably, there are some people that have made some money on BABA. It did bounce a little bit, but I would be very, very careful right in this market of Chinese stocks. There's just a lot of reasons for that. This chart is pretty horrible. This chart is pretty horrible for a stock, but as you can see, we're just in a downward trend. We did a little bit of a dead cat bounce, but today it pulled back, and it looks like it went to the 40-day line, and then it looks like it's going lower. So I wouldn't even short this one. This is just not something that I think is going to work very, very well. Let's look at the weekly chart on it. NEO. I mean, this one was good. I traded NEO back, over a year and a half ago, and I did pretty well on it. But here's the thing: you always want to be buying stocks within about 15% of their all-time high, because that's when they make most of their progress. When it goes below that, it just becomes much, much harder to make money in the stock. So right now, I just think that even though the relative strength line is improving on NEO, I just think that this is one you just want to stay away from. Really, the only stock really automotive is Tesla really to trade. They just announced, by the way, very interesting, they're going to file for a 3-for-1 stock split. This in a downturn market, this would be a little bit risky, but they are going to be splitting their stock, but I don't know exactly the dates yet. But they are going to be splitting 3-for-1. And the last split we did very, very well on. And of course, that was a 10-for-1 stock split there. So pretty nice when it comes all about it. So let's look at Tesla. Look at NEO. So really, we can't probably buy NEO, unfortunately. Tesla is a little bit different story. I'm waiting on Tesla. I still like the company, but it just looks like we're going to get some more trouble here. We do have this low, this bottom of this consolidation here, and that's about at 620. So I do kind of see that's where we're going to see the bounce, but right now we're in a downward trend, so it's just not a good place to buy it. The problem that Tesla has is that Tesla has, if you look at the last true buy point, it was about 900. And so a lot of people bought above 900. And so what happens is when the stock starts to make a move up, the people that were trapped here, they start to sell. So the problem with Tesla right now is what they call overhead supply. So this is the problem. Tesla has a high overhead supply, and this overhead supply unfortunately makes it difficult for the stock to move above a certain range. So every time it gets going, these people are selling, so there's a sort of a cap. So right now all you can really do with Tesla, really, I feel, is to watch this. So you just wait and watch, but don't buy Tesla right now. So that's really kind of, you know, that's kind of what you got to do, and it's not easy. I mean, so really with Tesla, it's got this overhead supply issue. So I just think you got to be real careful with it, and I would not buy it. I'd be on a watch list on this one right now, just because it's you know, just because that's right, just because. All right, are we at the bottom? Not even close. We have 20% down, I think, to go from here. And so I do think that we're going to go lower, but I think we're going to go probably about 20% lower on the S&P 500. So currently, let's take a look at that S&P 500. And we'll look at this one again because this is very, very informative. And again, I do think we're gonna. I do think we're gonna go down another leg. This was the first leg. This was the first leg down here, basically starting in the November-December timeframe. Then we had this relief rally. The second leg down came down here. That really ended in March, and then we had this second relief rally. We came down again, and then we had the third relief rally, and we've just broken that third relief rally here. As you can see, there was a break to the downside. So typically, this is, you know, typically from here to here is 25%. So typically it moves down about 20%. So we're looking at potentially this moving. This is going to move down about 800 points. So we're looking at possibly, you know, 3,500 or possibly lower. So maybe even 3,200 is going to be where we're going to be. That's going to be the floor, because typically it's going to move down about 20%. So we still have that to go because we broke the resistance there, and once we broke that resistance, it's a fall. It's a kind of a free fall. At least I believe in this market. And then there's just a lot of headwinds right now with the inflation situation and the potential war. Should I buy Amazon or SPY? Neither. I would not buy either Amazon or the Spider right now. Right now, the best place to be is in cash or in an inverse ETF. And I'll be talking about inverse ETFs on Monday. Both the SQQQ and there's other ones as well. So you can profit during these pullbacks. I have an ETF currently called the TBT, which is doing pretty well. Let me kind of show you that one as well. I started buying this about about a week ago. I started loading up on the TBT for the small portfolio. And basically, that's where I started buying it here. This is an inverse, of course, of the 20-year, the 30-year long bond, and it does better. As you can see, we've had nice increases here. It was up today, and I do believe it's probably going to go higher as we get, as the inflation kicks in, and it really is going to kick in. By the way, we're not anywhere near the bottom for the inflation. I can remember a time back in the 70s. When the mortgage rates were well over, well, this is actually in the 80s. The mortgage rates were well over 12%, and the average inflation was running, basically, it was basically the same situation that we had now. We had essentially a massive inflation spike, and it was painful. It was really, really painful. A lot of people lost their jobs, and I think that's going to happen this time. So, whatever. All right. I would not take advice from TikTok. True. You need to jump over to my YouTube channel. That's www.dallastradingfloor.com, or you can jump over directly at youtube.com/Dallas Trading Floor. Massive rally coming. Well, there will be a relief rally, but we're going to probably go down about another 20%. 20%. We are not going lower than 385. Well, okay. That might be true. Let's take a look at the spider, SPY. And let's take a look at the spider. 385. Okay. Well, I could see that. The bottom of the consolidation, and that's a good point that you point out there. The bottom of the consolidation right now for this pattern is 380. So, yeah, the bottom of this pattern, actually it's 380.54. But I do believe that this was a relief rally here, and I do believe that we're going to fall through this 380, and if we do, we're probably going to be down here. Unfortunately, according to Elliott wave theory, we're going to be down here at about 320. That would probably be the floor on the third leg down, the third retracement, if you are a fan of Elliott wave theory. So I do think we are probably going to go a little bit lower. We're just going to be only a little bit. Is that TBT? Can anyone confirm? Yes, it is. The TBT is a ETF that is 2 times. What happens is as the interest rates continue to go up, the TBT will go up as well. So this is a way that you can participate positively in this run. So let me just kind of see if I can put this out there for everyone. Let me see if I can do that. And oops, wait a minute. I wanted to show. Let's see. Where can I wanted to comment. I don't know if it's letting me. Heck. Let me see if I can comment on. There we go. It's this one is the TBT. So that's. Let's see if I can get that to work. So that's the one that I'm talking about. That's the TBT. That is the TBT. Okay, let's take another question from YouTube. Thank you very much. All right, let's see. Hey Jim, is it safe to say SDS is a safe play right now? Let's take a look at SDS. That's a good question. All right, let's look at SDS. And that is the ProShares Ultra Short S&P 500. This is a good one. Absolutely. I think that definitely. I think you're on the right track. I like these shorts at least for right now. This is going to be okay. So this is basically shorting the S&P 500. I like that idea. So I definitely think so. I definitely like the SDS. It's a short the S&P index ETF for everyone out there. So I like it for now. So I definitely like this one for now. I definitely think you're on the right track there. That's a good call because this one should move up. It's in the buy zone right now. There is a pivot on there's a pivot on this one, 45.88. So that's looking pretty good, and that's looking pretty good. So I think that you definitely it's safe to assume. I think that might be a good one for Monday, if you're not if you're not already into it. So I think it definitely is a safe play. Now, I wouldn't carry this one too long, but because here's the thing about these inverse ETFs, they tend to lose their mojo after a few days. If the direction changes, they lose a lot of their mojo. But right now, we're showing some really nice really nice action on this. You're going to see this thing pop on Monday, I think, as well. All right, Vertex Energy from Richard Smith. Thank you very much. It's VRTX, I think that's it. VRTX. Let's see if I got... No, Vertex, I'm sorry, Vertex It's not Vertex Energy. It's Vertex Pharma. That's the one. Vertex Pharma. You know, that's sort of that's sort of the one. So Vertex, VRTX Pharma. So that's, yeah. So that's the one that's the one I see is the Vertex Pharma here, and that definitely, you know, this one fell off the cliff too. See, this is the danger in this kind of market. It just takes everything with it. It was coming up very nice. This was a top performer, and it came right up to the buy point. And boom! When the market direction changed, it changed too. So that's the Vertex Pharma, and you know, I just wouldn't, you know, you know, it's just fallen. That's what they call a fallen angel. Not an angle. Fallen angel. So yeah, that's kind of what you know, that's kind of the thing. So the Vertex Pharma, I think, is kind of a fallen angel and not one that you could do. Okay, we're almost done here. And this is a question from Dennis. Thank you so much. 20%. Yeah, unfortunately, that's kind of what it's looking like. Unfortunately, this is the third leg down on the on the S&P. That's kind of what I'm looking at. I mean, I know that's, you know, hopefully I'm wrong. I want to be wrong on this one, but my charts are kind of showing me, yeah, this is the 20%. Yeah, that's kind of what you know, that's kind of what we're looking at, unfortunately. Yeah, so you know, minus 20% on the S&P, likely. So, not what I want to say, but that is kind of the way it is. So, basically, 20% down on the S&P, I do believe is likely based on this chart. And but you never can tell. I mean, you know, I believe me, I'm wrong quite a bit. So, I hope I'm wrong on that one. I really do. All right. Okay. Last few questions. EPD. Let's look at EPD real quick. Edward, Paul, David, and this is Enterprise Products. This one is showing some weakness a little bit. You know, this one is showing some weakness during the day today. This is an interesting company. This basically it's in the natural gas area, of course, and you know, this has been a good area of the market, but it did show a little bit of weakness. This is the kind of stock, if you're going to be in anything, this wouldn't be a bad one. So this might give us an opportunity to off this reversal. That's probably the best way to buy right now, is right as it, you know, as it comes up to the, it comes down to the 21-day line. The relative strength is super. Look at that. Look at that relative strength line. That's this line here. I want to show you that. That's this line here. That's the relative strength against the rest of all of the of all the stocks. If you notice, the S&P is going down. This is going up. So the strength against the S&P 500 is going up. So this is a good stock. I just probably wouldn't buy it on a downtrend. You know, we're now in a market is in correction, so you really got to be careful. And let's see how this settles on Monday. So, but I definitely think you can watch list this in this situation. So, I would watch list EE for now. You know, and it's just based on the overall market direction, which right now isn't that great. I wish it were better, but so basically what I would do is I would watch list EPD for right now. So that's kind of where I would be at on that. All right. Sorry. Oh, I'm sorry. Okay. Oh, Richard. VNTR. Let's look at VNTR. Thank you. VNTR. See what's going on there with this one. Materials, interesting. Okay, chemical products. Oh, no, I don't think I would buy this one. Okay, we did move above the We did make a move above the 200-day line, so that does make that form. But this is basically a downward trend. Just want to show you this. This is a downward trend. We've had the death cross, which is right there. So right now it's going to break, and it's probably going to break to the downside. My guess, you're going to see this thing break to the downside. Why? Because the volume is to the downside. So my guess is, Richard, we're probably going to see this thing break to the downside, and it probably will go lower. This is a penny stock. You really don't want to deal with it right now. Not a good look. So I would avoid this one. I would avoid this. So I would avoid VNTX. It's just really hard to buy in this market. And I just think that right now capital preservation is the most critical thing. So I think it's best to avoid this stock for now. Let's see if we can get, I just think it's best to avoid this stock for right now. It's just not going to come to any good. It's not going to come to anything good. Okay, and take the last question. Do you think the market will have another correction at June 15th? It's hard to say. It's really, really hard to say. I think the market is pricing in a lot of that already, so I think it's already priced in. But I think that we've got to wait. We got to wait probably for another leg down on the S&P. My guess is, we need to wait and look at the S&P. I think that we're going to see a turn on the S&P below about 350. So that's what I'm thinking. I think the Fed meeting, that definitely has a lot to do with it, but not everything. So I think that we have to wait to see that. We have to wait for the S&P to decline, and I think we're going to have to see it decline below 350. I think it's going to get strength at that level. But let's look at the spider just really quick, and this will be the last one. All right. Okay. This is the spider here, and basically the situation I think is that we need, this is the support level. The normal support level is about 380, but I think that we're going to take another leg down. See, this is the second leg. This is the second leg down here. This is the second leg down here. This was the relief rally that we just came through, and now it's got to go down. And I do believe it's going to have to go down to about here. That's where I'm guessing it's going to come down to about here. So this is the bottom of the consolidation. This is where the low point was, 380 on the spider. Now it's traded up a little bit after hours. I do expect it's going to rally a little bit, but it's going to come down, and I think it has to come down really to about 320 before we're going to see this third leg. So that's what I'm looking at. That's what I'm looking at very much. Very, very much. Oh, and one last remark in beautiful. Hey, Mark. Let's look at Altria. This is the ultimate. This is the stock that you. This is the ultimate dividend stock. This is cigarettes. This is back in the day when everybody was encouraged to smoke, the Social Security Administration didn't have to pay out because everyone was dying. This has always been a great stock. Altria Group, it's up a little bit. It was trading above that 200-day line. It's just moved up a little bit here. I don't know. Even this one may have trouble holding up. But here's the thing about Altria that you gotta say. This might be a stock that you might want to look at. Why? Because out of many of the stocks that I've been looking at, this one has the golden cross. This means that the 40-day line is moving above that 200-day line. That show and the slope of this 200-day line is up. So my guess is it's going to get support here and go higher. That's my guess based on these charts. So it looks like it is going to get support there. So I really appreciate that one, Mark. That's a great one. All right. Well, everybody, I hope that everybody is careful, because this is a treacherous market to trade. And this is just a treacherous market to trade. When the market is in correction, you want to take profits and you want to get into cash, because this market will pull down. When the S&P hits about when the spider hits about 320, it's probably going to bottom. Everyone's going to be crazy by then, but there's going to be some values out there. So right now, it's a good time to be in cash or short and get ready for the next upturn. And I think that's probably going to take a little bit of time, but I think it's coming. I mean, just because no stock, this market does not go up or down in a straight line. It goes in these legs down. So right now we're in a leg down. I suspect we're going to see a 20% drop in the S&P. So when the spider gets to about 320, that's when we probably want to start looking to buy once again. Thanks everybody. Thanks so much for joining us today on the show. By the way, if you're not already a member of the Action Trade Alerts, super easy to get on there. All you have to do is go to www.Dallas Trading Floor, and that helps us out a lot. And also, if you could, tell your friends about the show, but also please like the show. We really like it when you hit that like button. Please do that. It really, really helps us. So everyone stay safe. I'll be back on Monday at 5 o'clock. Everybody, happy trading.